Hey, 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 hey. How we doing? It is 5 o'clock live or live at 5, however we want to phrase it. That's what's happening right now. We are live at 5. All righty, we are live. Tell your friends, tell your people. Let me notify, not identify. Let me notify some people that I'm on. I'm on. Yes, at youtube.com/ at Educator2Trader. Um, let me go into Instagram and share with my Instagram folks that I'm live as well. We'll see if it will allow me to be live here. What if I should move it over there? But let's leave it like it is. Hey, hey, over in Instagram world. Hey, hey, over in YouTube and Facebook world. If you're here with me, please say hey to me. Hey, Arlissa. Hey, Anand. Hola. Miss Deborah. Hello, hello. Let me make this a little bit smaller so I don't have to look all across them. It's a pretty wide screen. Then I look like something's wrong with my neck if I just keep swinging my head back and forth. That's not what we're after. That's not the look we're going for. Not the look we're going for. Hey, everybody. I sure hope y'all are having a good Sunday so far. It's a little rainy here. I'm in Jacksonville, Florida. It's a bit rainy here. So it's been a kind of a dreary day. I did go out and get in it a little bit today. I went and had I had a brunch with my daughter. I spent some brunch time with my daughter. So that was good today. I generally on Sundays don't really go too far. I usually like stay around the house and because I'm, busy doing all the things. So when I'm Sundays, I kind of stay in and hang out. I see Kimberly's here. Hey there, Kimberly, and Adrian. Hey, Adrian. And Deonta Reed. Deontay, there we go. Not Deonta Reed. Deontay Reed. Hey, how y'all doing? How y'all doing? Y'all come on in, tell your people, let them know that I am here. Those who are on Instagram, I'm going to send you over to YouTube so that way you can see my screen because you want to be able to see what I'm going to talk about today. On our list, we always have good stuff though. And today is no better than any other day because I feel like I, bring some value, you add some little, some value to what we're talking about. So I like to believe that each week, though each week may have its different things, but each week still has its good stuff. And I see that the screen is already starting to act the fool. And we're going to say, in the name of Jesus, we need this feed to act right. Hello, Andercat and Franco. Good morning. Good morning. Even though it's afternoon, I know that. Hey, y'all. Hey, y'all. Hey, y'all. Okay. So I'm going to go ahead and get started. What we're going to cover today, we're going to look at a little bit back into last week as to what happened in SPX and market. Going to talk about the meetings that are coming for this week. We're going to talk about earnings, and we're going to look at automated trading, doing some automated trading for next week. We're going to look at that too. Yes, family check-in time. Hey, Boom Wolf. We're going to talk about automated trading for next week. And we're going to look at how do we use Peakbot in order to set the trades and let the bot do the work for us. For those who are, new with us, credit spreads is kind of what we do here. Credit spreads is kind of our thing. So I'm going to put a little note down here that you kind of know where we're going and putting some little things in the chat so you'll know. Hey, Karen, catch the replay later. No problem. I'm glad you stepped in and said hello. Use peakbot.com is where we're going to go. And we're going to be talking about put credit. I have that right where I can't see it. There we go. Put credit spread. So I have to look around the camera arm. That's not what we need to do. Hello, Marcia. Hi. I think that's Marcia. Hey, Marcia, how are you? Okay, let's look at what we got going on the screens today. Okay, I'm going to put us up here and then I'm going to share when I can get back to where I was. I got me a device that's going to help me to be able to share easier and quicker. And I need to, I'm going to need to basically use it, figure it all out, look at the directions. Hey, don't be like me, just start picking up and running with something and don't read none of the directions. That's not how we're supposed to do that. You're supposed to read the directions first. Nope, I don't want a video file. Nope, sorry. Thank you. Thank you. I'm using StreamYard for those who are doing streaming. StreamYard allows you to stream to multiple places. It allows you to stream Facebook, Instagram, not yet. Facebook, LinkedIn, YouTube. That's another place you can stream directly to. That's what it helps you to do with StreamYard. It lets you go to stream to multiple platforms at one time. Hello, Ken and Drumsy. Make sure that you come over and see us on YouTube so you can see my screen. I believe I'm sharing my screen now. If I'm not sharing my screen, somebody say, but I believe I can see that I'm sharing my screen. This is the VIX. I don't think we really talk about the VIX much when we're in the past weeks, but the VIX is the volatility index. It basically lets you know how much fear is in the market and how much volatility is there. When the VIX is down, when I say down is 10, 12, then that's VIX being down. That basically means the market can mean, they're inverses. The market can be going up. But the VIX can go up into the 18, 19s, 20s, even above 20, 30, 40, can go up higher. And when the VIX is higher, that means that there's more fear in the market and the market is generally going down. The VIX is right now at 12.63. It's down 0.29 from since the December the 1st, or on December the 1st. It did that during the day, went down 29 cents during the day, which meant the market went up on Friday. And if you remember watching what the market on Friday, it actually did go up. This is the chart for SPX, and it's SPX on the weekly chart. I started on the weekly chart. You'll see at the bottom of the screen, I'm talking about a free webinar that I have. Startwiththechart.com is where you can find it. And it's a charting webinar that's going to talk to you about some technical analysis and pieces and things that have to do with charting. Everything you're doing when you're working with the stock market needs to start with the chart. All right. If you're not charting, you're asking for problems, right? You might have some short-term success, but you want to keep looking for charts. In this market we're in right now, you need to be able to read a stock chart. All right. And there's things like candles and candle patterns and those kind of things. If you're using some indicators, don't even have to really use a bunch of indicators to trade. Some people like overdo it there, but you want to know how to chart. So you can check out that free webinar when you have a chance. All right. This is SPX on the weekly chart. This lets you know each one of these candles is 1 week's worth of data. If we're looking for, a trend line, we've got a nice little trend line going from here. Right, definitely SPX is longer term, boom, 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 kind of on a downtrend. I did have this little uptrend here because if you look at it just for these few weeks, this is a short-term trend going over here. If you look just at that, then in the past, that looks like 5, 10, maybe 15 weeks, maybe 20 weeks, we've had a little bit of an upward rise, and it's just been a little whoop, whoop. This is the red. This red line is the trend that I put together. Nope, I need to go the other way. I put a little trend line on that for that week, just for these weeks from the few that way back here, which is July, all the way up till November. It's a little bitty rise, little bitty rise. I can show you if we widen it a bit. You can maybe see that red line in here. It's a little bit of a rise. All right. Let's switch over to the daily candle, though, the daily chart, which means every candle here is a day's worth of data. And if you see here, we've been rising and climbing for a while. Ooh, we've been on the rise since we hit the support area back on October 27th. And we've been rolling up ever since. We've had one little red day in the middle, which I guess where SPX needed to rest. That was the early part of November the 9th. We've had a few smaller red candles, but for the most part, you can see this trend has definitely been an upward ride on the daily chart. right? If we start with, when you're doing trend lines, you want to at least touch 2 to 3 places, and this would be our trend line here. That's what we've been riding on. Do come back a little bit, not even get close, and still riding up the trend. The question now is, what will happen next? Why do we say what will happen next? Because SPX has come right back into a resistance area. Notice back here on July 27th, we hit this resistance pretty hard and had a big engulfing candle, this is called, which is where it engulfed the previous candle, right? And we're right back in that zone again now. We run right into it on Friday. We're maybe a couple points away from the top of that line right now. So the question is, what happens next? It's anybody's guess. This is the thing. We have technicals that we can use to say it's doing this, it's done that. We've got support and resistance, but it does seem that more recently, the market doesn't seem to be respecting the technicals as much as they used to. And that could be for a lot of different reasons. It could be, I dare not speculate. I dare not speculate as to why, but the word starts with the man and ends with ipulation. Things have been a bit manipulated around, but we're trading against all the things. We're trading against the people. We're trading against the algorithms. We're trading against the bots. We're trading against all the things. So again, you do the best you can reading what you see. I always tell my community, you trade what you see. Trade what you see. And this chart is the place where you gonna see what you see. All right. You don't want to jump in on a trade thinking it's going to run to the moon and you realize it's running right into resistance like this one did. Right. So that's what's going on with SPX. That's what we've been doing. What happens next? We're in it's kind of consolidated here for several days, didn't really do a lot. And then Friday decided it was ready to run up a little bit more. Closed up the gap that we had here. We had a buyer's gap here. I can take it off. That's what these dotted lines mean, is it's a gap, and that got closed on Friday. All right. Let's look at what kind of meetings we have coming up this week. Yes, thank you, Anan. Manipulation. So this coming week, we have a few meetings. We got a red folder every day this week, except for tomorrow, except for Monday, right? Factory orders on Monday, December the 4th, month over month. That's a yellow folder. This seems to be the only thing on the Forex Factory. Now, I use the Forex Factory calendar just because it does give us the events that are happening and meetings and stuff. Where I don't trade Forex. If anybody comes in your inbox talking about they are Arlissa and you want to talk about Forex, that's not me. Okay, that's not me. I do not trade Forex. Please don't fall prey to anybody who is impersonating me. I just never thought I'd be getting impersonated. But then I see I got spam things pop, scam and spam. Like, no, I'm not asking anybody for any money. If I come in your inbox, which is rare, but if I do come in your inbox, I'm coming in there with a product saying, I think this could help you. I'm not going to ever come in asking you just flat out for your cash. It doesn't work like that. I don't believe in that. Okay. So Tuesday, we do have PMI is going to happen on Tuesday at 10 o'clock, and JOLTS job openings. Those are two things that are red folders. Red folders mean high volatility. Wednesday, we've got a red folder on the ADP non-farm employment change. Got some other non-farm productivity things, trade balance, crude oil. Those are all yellow, but the non-farm employment change is a red folder. It happens at 8:15, which is before the market opens. On Thursday, we've got another red folder, 8:30, the unemployment claims. Again, unemployment claims is an indicator of what's going on with our economy. So that's why we're concerned about that. We got challenger job cuts, natural gas storage, consumer credit. These things are important too, but they're all yellow folders according to Forex Factory. And then on Friday, we got several red folders, 8:30, so it's before market opens, and then 10 o'clock. But we have average hourly earnings, non-farm employment change, unemployment rate, preliminary University of Michigan consumer sentiments. Now, they ask a bunch of people about this. University of Michigan is them asking a bunch of people how they feel about different stuff. They asked 500 folks. Not sure what 500 people they asked, but that shows up every week as a red folder. So whoever they're asking, they must have some insight into what's going on in the economy. Nope, that's not what I wanted. I tried to go to, why can't it show me a back page? I don't want that. That's not what I want. Here we go. I wanted this. Looking at this week, I'm trying to see if there's anything here that didn't get mentioned over there. These bill auctions do show up on the investing.com. Sometimes investing.com gives us information that we don't see on Forex Factory, but PMI is mentioned on Tuesday. Non-ISM, non-manufacturing prices, that's all same stuff that was mentioned over on Tuesday. On Wednesday, non-farm unemployment, crude oil. Now, crude oil over here shows as 3 stars, but over on Forex Factory is only showed as low volatility. So, you know, I think what the oil has going on is important, especially in the midst of our unrest in the Middle East. What's going on with oil is important, and that's why it's got 3 stars right here, right? So that's a higher volatility. Jobless claims for Thursday, Fed balance sheet, and then Friday, we do have several things that are read on Friday. All right, so I think all of that is good. All of that is good. Let's go look at some earnings. Let's go see what we got in the earnings category. Hey, everybody, if y'all got any questions, please be sure to put them in the chat, and I will see them and comment about them. I will see them and comment. Here we go. Earnings for this coming week. Earnings for this coming week. SAIC, Fusion Fuel. This is Monday before the open. After close on Monday, GitLab or JitLab, Joanne, and Culp, CULP. NEO, what we hadn't mentioned, NEO in so long, you'll forget some of this stuff. It's like every video you see is talking about some of these stocks. And then next thing you know, nobody's talking about it. And NEO was one of those stocks that was, everybody was mentioning NEO, every video, NEO. The next you know, it's like nothing. So anyway, NEO falls in the electric vehicle space. I think they're from out of China. So Tuesday before the market open is NEO earnings. AutoZone, Signet, JM Smucker's company, the jelly people, America's Car Mart, Designer Brands, Ferguson, G3 or GIII, Zero Fox, and Hoinania or Hoinanian. Oh, that's interesting. Hovnanian Enterprise, HOV. Tuesday after close, we got Mongo, Sentinel, Toll Brothers, which I think Toll Brothers is the house people. I always thought that the Toll Brothers were the people who made the cookies. But I think Toll Brothers are the people who do houses. Okay, AeroVironment is there, Dave & Buster's, Asana, Healthy Equity Box, Stitch Fix, and YEXT. Wednesday morning, we've got Ollie's, the deal discount place, Lovesac, Campbell's, Vera Bradley, Thor, Unify, Brown Foreman. I think Brown Foreman used to be something like Brown and Root or somebody. Maybe they were somebody else before, but either way, Brown Foreman, Wednesday before market, Corn Ferry. And Wednesday, we've got C3 AI. Now, this is another one that was all the rave for a long time. The AI, when AI was real hot and smoking, C3 AI was making its move and making its run, but they're having earnings Wednesday after market closes. GameStop, Chewy, we've got Viva, ChargePoint is there, the electric space, Braze, Oxford, Sportsman here, Duckhorn. Thursday morning before market opens, Dollar General, Liquidity, we've got SecureWorks, I think this is Hooker, and Methode Electronics. Thursday after close, Broadcom, Lululemon, DocuSign, RH, HashiCorp, Smith & Wesson. Yeah, some Smith & Wesson. You need some help. If you need some help, you might want to get some Smith & Wesson. Friday before the market opens, this is a Chinese company. Looks like it's MCMO, looks like, and Johnson Outdoors. All right. None of those are, the big heavy hitters per se. There's some that are, in the spaces that may cause a little bit of a ruckus, but for the most part, these are all, our big boys aren't being listed here. But if you trade any of these, you always want to be mindful about what is going on with earnings. Okay, you always want to be mindful about what's happening with earnings. Always, always. Because if you're trading them, you want to know that that's called what we call a binary event, because price generally gets very volatile just before and just after earnings. So whatever trades you're doing, you want to either have an earnings strategy, or you want to watch and wait till it's over, right? Whenever the earnings has been reported, you can jump on, because I'm telling you, earnings can feel like a crapshoot. And we're not here to bet and gamble. That's not what we do. We don't bet and gamble. We basically are doing what needs to be done. And we're using strategies, real strategies to work with. We're not just out here betting our money and hoping for the best. No, we got a strategy we're going to use. And unless you got a good earning strategy to use, then go ahead and just wait till it's all over and then trade what you see after earnings. All right. I always say, and I probably should have said this by now, is I don't, I'm not making any like investing advice. This is not investing advice. This is me just talking and y'all just listening. That's what's happening here. I'm talking and y'all are listening. Okay. I'm not a financial planner, none of those things. I'm just here to help us along the way. I believe there is possibilities, significant possibilities in the market. I've seen it change people's lives and just really give us a space to come in and utilize the market to generate revenue and generate profits. It requires learning. Listen, you don't get to do anything without putting something on the wood. You're either going to cost you money or it's going to cost you time. It's going to cost you money or time. That's the way that goes. No education comes without some work, right? So to learn the stock market is like a new skill, but we don't have to overcomplicate it. And I do see sometimes we overcomplicate the market, and that's not what we want to do either. Okay. As schools of fish that follow the whales that move the ocean. Yes, that's what we are, Anand, following the whales that move the ocean. Okay, so let's look at Peakbot. Let's look at Peakbot, automated trading. Just before I get started, Peakbot does have an automated system, right? You have a 2-week free trial. If you want to go into a free trial with Peakbot, you have used and I've done a few videos here already on Peakbot on my channel. So if this is something that interests you, and it should, by the way, it just takes some of the hassle off of your brain when the bot is entering the trades, and just it lets them expire worthless. There's other bots for other automated trading, but very few, if any, are for the seller. And because we're sellers, we, of course, love a good wheel trade, love a good credit spread trade. We're all in love with a good iron condor, right? And iron condor is put credit spread and call credit spread together. You singing my song when you start talking about iron condors. Yes, yes, and yes. Okay, but what Peakbot does, let me go here. Quit acting silly. Peakbot has, let me get you another. I'm gonna go to another window because I want to just show you what the front of it looks like, so that way you can get to where I am on the watch list. Okay, let's hope it comes and opens up in a reasonable amount of time. It's been going slow, but this is usepeakbot.com. Streamline option selling for passive income. It connects with TD Ameritrade and Tradier, and they're working on now getting connected with Schwab, because Schwab took over for TD Ameritrade, so they're working on getting with them. So you can go here and get your account under strategies. This is where I did under strategies. You see the watch list. So I'm at the watch list there. Under strategies, you can pick anybody can see the watch list. You don't have to have an account to see the watch list. Anybody can see that. Okay, just go in here and see what the list is. The watch list is updated on Sunday for the wheel. The wheel is basically put credit spreads. That's what they're pretty much doing. The wheel, though it's like selling puts, but then they hedge it with basically with a bought leg, making it into a put credit spread. Okay, I'm putting that in the comments. So you're selling a put, You can do it hedged, which means they're going to turn on the bought leg behind the sell leg, and it's going to turn into a spread. Or you can do it unhedged and just sell a put, right? I like the put credit spread because it does give you the ability to use less collateral in order to enter the trade. Because anybody who sells puts knows that when you're selling puts, if you pick the 10 strike, let's say, and you're selling a put, 10 times 100 is $1,000, which means you need $1,000 of collateral to want to run that trade. The whole time that trade is on, that $1,000 of collateral is blocked away by your broker. But if you do a 10 strike as a sell leg and you do, for example, an 8 strike as your buy leg, then you're only utilizing $200 of collateral that the broker is going to stay blocked away. All this is explained here. The sell leg, basically, the bot will look for the 30 delta, the 0.3 delta strike. That would be the sell strike. And then the bot strike, the bot will look for the 0.10 delta. And that's what it will do. The spreads here, you can see sold put strike is 30 delta, right? And the bot put strike, where is it? It was here the other day, so you can see the both. Where'd it go? I am on the right one, baby. Where is the other strike? Because it would show you the strike between these two. Looks like that they changed that this week. Dylan, you don't be. Dylan is my dude at Peakbot. But usually there's another leg here that shows you the other strike. So 30 delta is your sold put strike. The other one would be the 10 delta. We're going to look at a few of these on the option chain so we can see what would it be. All right. I think, okay, not telling anybody what to do, but when you're doing the ones closer to the top and your estimated return is like 4%, 2%, you're a little higher. These are going to be more volatile because you're getting a 2% return in a week, right? Not that that sounds like a lot, but when you got to manage the volatility. So I would strongly suggest, right, that you get into the maybe between 1.5, maybe even 1.25 down to maybe 0.75. There's all these choices. This is the percentage. This is the estimated return percent, right? I would say that you should get into the 1.5, going down into the 1.0% return, 0.75. See all these choices? All these choices for all these things for you to choose. If you're doing the wheel, you do need to do what's here. You don't get to pick the stocks that are not here. You need to use the ones that are here. Okay. I need something. Warren. Sorry, y'all. Trying to call Mr. P and he's not hearing me. Okay. Anyway, let's look at some of these. What do we like here? Anybody who's looking on at the list here, let's see. Does anybody have any that jumps out at them that they would be interested? I'm a fan of TQQQ. I'm a fan of that one. Let me see. I need to turn off the camera so I can turn on this fan. I'm hot. Yes, I'm plugged in. There we go. Can I feel the air? I feel the rain. Yes, I feel the rain. It was a little warm in here. I don't know if I'm feeling it enough. Whew, something's blowing this way. Okay. Did anybody put a comment over there? Can y'all see these? They're teensy weensy, huh? Let me see if I can make it any bigger. I'll find something here. Nope, that's not the one I want to make bigger. I want to make these bigger. There we go. Let's see if we're looking at maybe between 125. We've got FooTube, never heard of them. PN Entertainment, Shopify. Shopify might be a good one. Trade Desk, Ultra Pro, TQQQ. Let me write down a few of these so we'll know what we're going to look at. I'm going to look at TQQQ. Okay. Y'all putting any comments over there? Y'all not telling me. I'll pick my own. If y'all don't tell me, I'll pick my own. How about we look at Palantir? That's over here, right? See something down here in the around 1. This is S triple Q. S triple Q and T triple Q are inverses. S triple Q is the short. T triple Q is just the small of triple Q. General Motors, Uber. Oh, United Steel. Let's go with that one. See what's happening with United Steel. Oh, SOXL. Is SOXL on the list? Let me see if I see it. I don't know if I see SOXL. Do you see it? You see it, Tamar? I'm hoping I'm not overlooking it. CCL. Okay, let's look at CCL. Okay, that gives us several to look at. So let's do that. Let's do that. Look at what we got here. Okay. Got about 3 or 4 of these. Let's switch over now to, and take us over to the, let me change my share screen. Where are you? It's hiding. Okay, how about we do that? The non-share screen it's the hiding behind this other screen here. So I can't even see. There we go. I want to share. Okay, there we go. Present. I think we get to pick the screen this time. It didn't want me to pick. Okay. I believe we can see now what's what. Ay. Come on. Come on. Come on. There we go. DraftKings. Okay, I don't think it was there either. D. Is it DKNG? I think it is DraftKings. Okay, we got that's 6 of them. We'll use those 6 and see what we come with. But tomorrow, I'm a fan of SOXL too, but it's not on the wheel. We have to manage our own wheel. We have to manage our own wheel with that. Okay, so let's look at T triple Q first. All right, we're gonna look here. I'm going to T triple Q because I'm gonna show you the strikes that the bot would pick and what that's going to do in terms of money and collateral, right? And so you'll know what collateral it's going to use up and what strikes it will most likely pick. The bot does not enter the trades until 10 or 11 on Monday, and it may not enter until Tuesday. All right. The bot looks to see what is the volatility happening with that stock. When have things settled down? It definitely does not enter at 9:30 because there's too much volatility happening. The bot is checking to see when there's a settle down. Then it goes to find the strikes and it enters the trade. It enters the trade with both of these legs and they are set to expire at the end of the week. You can still control whatever it is you want to do. So if you decide the next day you want to close it and take your profits and run or whatsoever, you can, or you can let it go all week and expire on its own, right? And if it expires past your strike, then you will be assigned the shares, or you can buy your way out if you want. The bot does not close the wheel for you. It opens the trade. It does not close it. But you have, even though the bot is doing the work, or Peakbot, is doing all the work, it's not, you still have all the control over your platform. Okay. This is one thing people kind of get like, I don't want something else trading for me and then I can't. No. You maintain all the control. You can close these trades whenever you want. And then you can also turn it off and say, don't even enter. You said don't even enter. Okay. So we're looking here at T triple Q. If it was Monday morning, let's look at this as if it was Monday morning and we were looking for the 30 delta and the 10 delta. Looks like over here, the 30 delta is going to be about the 43. Okay, 43 on the put. Remember, we're doing puts. So it's going to be 43 is going to be the sell leg because that is around 30 delta, right? And then it's going to do a buy leg around 10 delta, which looks like about 41. I'm looking at the delta. We did 30 delta, around 30 delta for 43, and around 10 delta is 41. So if you do 41, 43, 41/43 on a put credit spread, so T triple Q, if we did 41, 43, and that is $200 of collateral. Okay, I'm going to change the screen so we can see what we're going to possibly take in for premiums. Say we turn this, nope, not back ratio, to vertical. And we would pick 43. I'm going to adjust the buy leg to 41 we talked about. Okay, 43, 41 here. Looks like we take in about $37. Okay, now again, we're looking at this now while the market is closed, just for us to be able to see $37 of premiums will be collected. Okay, so you're leveraging $200 and you're collecting $37. Right, so $37 divided by 200 is going to tell you that's about 18, 19% return. That's actually pretty high for that collateral. That's good, because if you put up $200, and what this says is you want the price to expire above 43. You want price to expire above 43. Okay, when you're talking about a 0.33 delta, 0.30 delta means there's a 70% chance the price will expire at this strike. That's what that 0.3 delta means. The 0.3 delta means there's a 70% chance. Take away your 0.3 minus your 1. That's your, the opposite of that all adds up to 1. 0.3 delta means there's a 70% chance the price is going to expire at this strike. 70% chance of your trade being good. Okay, 70% chance of your trade being good. Now, I know that I repeat things a couple times, and that is because I am a math professor. That's what I do in real life. I do math professoring, right? I do math professoring as my job, right? So I know things have to be repeated a couple times in order for it to stick. All right? So $37. You look at this screen here. I'm not sure if y'all can see, just for the credit spread people, it was saying we're going to collect $37. That is our max profit. You're not going to make anything more than what you take in on this trade. And the max loss, or the amount that you're leveraging, is $163, which is 200. The distance of the spread, 41 to 43, is 2 times 100 is 200. Minus the $37 they gave you means you're leveraging $163. Going to be the impact to your trade, impact to your buying power. Sorry, that's the impact to your buying power. All right. If you got some questions, please be sure to ask them. That's our T triple Q. We currently have a what do we have going? The Christmas Credit Spreads Challenge is going right now. The Christmas Credit Spreads Challenge, and we're using just $100 each week to do a credit spread, because I want people to get into the rhythm and the understanding of how do we do credit spreads. It's a great way to grow a small account, right? A great way to grow small accounts. All right, looking at Palantir next. Palantir, looking for 0.3 delta. 0.3 delta is about 19.5. I'm writing this down. That's why I'm looking down. 0.3 delta is around 19.5, and a 0.1 delta is around 18.5. Well, that's a collateral, 19.5 to 18.5, right? Is $100. 19.5 is basically one spread. which is $100 of collateral. Now that's Palantir. That's Palantir. I'm going to go and change this to 18.5, 19.5, and let's see what kind of, nope. Let's see what kind of premiums we can look at. 19.5 to 18.5. Looks like for that one spread or the $100 of collateral, you could collect $17. $17 of collateral using $17 of premiums using $100 of collateral is about a 17% return on that collateral, right? $17 in premiums using $100 of collateral. The collateral is determined by the width of the spread. So the spread is 18.5 to 19.5. If you take the difference of those, it's only one. So 1 times 100 shares is $100, but they give you $17 as soon as you enter the trade. Okay. $17, $37 was up here. Okay, let's go look at SQQQ. Let's go look at SQQQ. In this case, I am not looking at the chart for these because the bot is going to determine these strikes based on what the delta is. But if you are entering credit spreads on your own, you want to go look at the chart. You want to go check the chart and make sure that you're getting your put credit spreads short leg. You want to be getting it below support. You want to be getting it below support. All right. Yes, here. My phone is still showing on Instagram though. So, okay. So let's look at SQQQ. We're on the single chart again. And 0.30 delta is between these two. I don't know about SQQQ. You might have to wait till till Monday to see what actually happens with this, because we got 0.34 delta and 0.16. 0.34 and 0.16. 0.34 is a little high, but again, I told you that the bot waits until it can get to a clear place, because there's no real easy spot between these two. What I would see would be 14.5, 15.5 is what I see there if it was going to, but 15.5 is only 39 cents away from current price. That's going to be closer than close. That may be closer than you want to be. But let's see what our premiums would look like if we were willing, if you were willing to take on that kind of closeness, then SQQQ 14.5, 15.5. I don't think I put the last stock on that other one. I don't think I wrote that we were talking about Palantir. But 14.5, 15.5 collects at this point. We look at it just from today. You know, these things you don't get to collect all that it says over the weekends, because, you know, one time market opens and things change, it might be a little bit different, but you definitely want to, you know, have a earlier look, see what it's doing. Okay, we did SQQQ. SQQQ was 14.5, 15.5. And it was collecting $17 as well. Let's go to X. I think X was the steel company. Too bad that X wasn't available, because I know that Elon Musk would have wanted to take that ticker, but somebody already got it. Hey, Lynn, how you doing? We're going through some Peakbot trades, or what would Peakbot do? Peakbot is an automated trading company. Okay, we're looking here at X, which is the United States Steel, U.S. Steel. 30 delta puts us around 35. That puts us around 35. And the 10 delta puts us around 33.5. 35, 33.5. Okay, this is X. 33.5/35 is our put credit spread. You're selling puts. They're calling it the wheel, and you're selling a put credit spread because you're buying a strike behind your sold leg in order to hedge against if the price goes, drops the bottom out or whatever. You've got something hedged there to help you with your put side. Okay, that's basically you have a sold leg and a bought leg in order to hedge. So let's go look at what would be our premiums. We got 33.5 and 35 are our things. So I would go here. Boop. I'm only showing you now. The bot's going to do all this stuff for us. I'm showing you the steps here, but this is 33.5 and 35 is 1.5 spread, huh? A 1.5 spread, which is $150 of collateral. 1.5 times 100. Again, I know I'm repeating the same stuff, but sometimes it takes people a few times to hear it, and then it finally clicks like, oh, I get it. It's $150 collateral, and it looks like on our screen you would collect about $23 in premiums. Collects $23 in premium. Okay, this is why I say that put credit spreads can help grow your account. You leverage $150 and you make $23 out of that. And for those who are, the calculator people, I took 23 and divided by 150. That is a 15% return in 1 week. The bot runs these trades for each week. That's a 15% return on collateral, right? I'm taking the amount that you're receiving divided by the amount of the spread. It's a 15% return on collateral in just the week. You leveraged 150 to make 23. At the end of the week, if the strike is above, in this case, if the price of X is above $35, then the broker releases your 150 and you keep your $23. You don't have to wait till the end of the week. You can close these trades whenever you want to. Even though the bot entered them, you can close them when you're ready. Okay. Okay. I don't see any questions popping up. Y'all must be just riding along. Y'all just riding along. If you got questions, please ask. Please ask them. Okay. Next on our list was CCL. Carnival Cruise Line. Who's going on a cruise this year? Anybody cruising Christmas time? Anybody cruising for Christmas? I'm interested. I feel like I haven't gone anywhere in a while. I'm usually, because I've lived abroad, we would always come home in the summer. And then while we were home in the summer, we'd go do stuff. And while we were abroad, we'd always go to other countries and stuff. But now that I've been back in the US, I don't seem to be traveling as much. And I feel like I should get on an airplane or something. I'm like, I need to get on me an aeroplane or something. I don't have to leave the country, but I should go somewhere, even if it's somewhere local. So if anybody's got some ideas as to where I should go, I think I should go do something. I should go do something, right? Gonna have a Christmas break. All right, let's look at Carnival Cruise Lines. Another one where the strikes, there's no clear, easy 0.3 strike or 30 delta. 15.5 is 38 delta. That's a 62% chance of it being at this strike. You can go down to 15, but see what you don't know on this side. Maybe when Monday opens and it starts to move around, you may be able to see. But if you did 15, maybe 15, 14.5, just these two, not for Christmas, but you went recently. Oh, yeah. Where'd you go, Andrew Cat? Tell me where you went on a cruise. I like to go on a cruise because it's all in one place. You just hop on and ride. So 14.5 for Carnival Cruise Lines has very low premiums, only $4 for the week. And you're going to spend at least $1 in fees. So I probably wouldn't do Carnival Cruise Line with the bot. Unless you, because you won't, the bot's going to pick its own strikes for you. You'd have to widen this spread out to make it make sense. Kimberly says, I'm just starting my learning on this. So this question may be too basic. Nope, for others here. So if the price of the stock on TQQQ, for example, ended up at any price below $43, the max loss would be $163. That is a very good question. Okay, so when we had TQQQ, we had what? 41.43, right? So 41.43. If price goes below 43, that leg is then what's called breached, but you're not at max loss. Max loss is only incurred when both strikes are breached. Max loss is incurred when both strikes are breached at expiration. Okay, so if you're at Friday, 4 o'clock, and the price is at less than $41, okay, we have 41.43. If you get to Friday at 4 o'clock and price is below $41, then you will suffer the max loss of $163. Anytime before that, it's going to cost something, probably more than what you took in, because we're talking about taking in what, $37. If it goes past that 143 or down below the 143, the spread is going to be worth something, probably more than 37, and you can buy it back, but it won't be a max loss. Okay, the spread is worth what it's worth at the time. So it depends on, that's why I can't say like a dollar figure, but it's worth no more than 163 at any time, right? You can't lose any more than the width of the spread. That's another reason why, you like credit spreads. You know what you're going to get for your profits, and you know what you're going to have for losses. And the situation for losses is very clear and defined. Okay. All right. I've never been to the DR. That's on my list. Virgin is much better. Never been to the DR yet. Makes sense, Kimberly. Thank you for asking that question. That's good. Okay, the next one we're looking at, last one, is DraftKings. DKNG. I did have one more. I wonder why I didn't see Coinbase on that list. Did anybody see Coinbase on that list? Oh, yeah, I do see it. It's at a 1.98%. I want to look at that one before we go. So DraftKings, then we'll look at Coinbase. Carnival Cruise Line, I don't think would be good for us to use on Peakbot. I don't think that will be good for this week. Maybe another week, but not this week. Looking at DraftKings, 30 Delta is around 38, and a 10 Delta is around 36. 38.36 is a 2 spread. That's a 2 spread. So we're talking about $200 of collateral. Okay. Okay, so you don't get to choose. The bot chooses the 30 Delta and the 10 Delta strike. The bot chooses the strikes, right? So I'm just letting you know I'm showing you what strikes or what kind of spread you're going to be looking at, because the bot is looking for 30 Delta and 10 Delta. Yes. Okay. DraftKings, I said 38.36. So if we switch this over to vertical, we should be able to see 38.36. What kind of monties we're going to take in. Okay, so we've got a 2 spread here, 38.36, and it's going to pay $29. Okay, so this is DraftKings. Okay, 36.38. Put credit spread, $200 of collateral. Paying what did I say? $29 in premiums. All righty. Okay, let's look at the last one now. I said that the last one was the last one, but we're going to look at one last one. One last one. We're going to look at one more. I'm looking at Coinbase. Let's look at Coinbase. Coinbase, of course, in the crypto space. The crypto space is getting a little movement because of the ETF that is looking to be approved. So there's been a little bit of movement happening over in crypto. I'm not a crypto trader at this point. So just like I said, I won't be in your chat talking about Forex. I won't hit you in your DMs talking about that. I won't be in your DMs talking about crypto either. I do watch some stuff that's happening with crypto, and I am getting a little more interested, but I don't trade it enough to be coming in your inbox talking about it. So that won't be me. Okay. I'm looking at Coinbase right now. Let's look for the 30 delta. 30 delta is between 128 and 129. Right? It's going to determine which way this is going. I'm going to stick with I'm going to go with 128. Okay? Because you want to be that extra little place, a little room. 128 would be better. And the 10 delta, this is a pretty wide spread here though, because Coinbase is a $133 stock. So the 10 delta here is 119. So between 128 and 119, you got any math people in the house? 119 to 128 is, what's that, $900 of collateral? Okay, there's 9 between. Oh no, that's 11. No, that's 9. I was gonna say that's 11. I'm going the other way. 9 is the spread between 119 and 128 is 9 times 100 is $900 of collateral. Let's go see how much we're gonna collect. Yes, I'm about to close this. I just closed my third closing. My third closing. We had 128 and we're going down to 119. 128 and 119 here. You're going to collect $183 in premiums. Collecting $183 in premiums. 183 divided by the 900. Let's see what kind of return that is. 183 divided by 900. That's a 20% return on collateral. 20% return on collateral for the week. But this one was up there it was almost a 2% return on the money. It showed on the Peakbot chart. So it's going to be a little more volatile because we're talking about Coinbase, right? So you got a little more volatility, got a little more volatility going on with that. I'm going to stop sharing here and I'm just going to come back to me. Last one is like a preacher saying in my closing and an hour later, do not come for me, sir. So yes, Janae, if you're using Peakbot, Peakbot is going to use the 30 delta and the 10 delta to pick the strikes. So if you're using the automated system of Peakbot is automated trading with a bot. Okay. If you're letting Peakbot do the work for you, it's going to determine the best time to enter, and it's going to use the 30 and the 10 deltas to pick the strikes. And you're going to look up and the trade is just going to be in your platform. Okay. You're going to say, I'm good. And the trade's going to be on and popping. Okay. Trade's going to be on and popping. So that's where now, even if we're looking as individuals, you can look and use the delta as a way that you can help yourself select strikes. But I would suggest you combine that with the chart. If you're going to let the bot do the work, then let it do all the work, right? But if you're going to select credit spread strikes for yourself, combine the delta and the strikes, put them together. So check the chart, right? Check the delta. Make sure you agree that the strikes and the chart, the delta, all those things are kind of in cahoots. All right. Make sure they're in cahoots. You're very welcome. If you're going to use, again, Peakbot has a free trial. You can join up with free trial. When you go there, they're going to ask you who sent you. Tell them that Arlissa sent you or Educator2Trader sent you. So tell them that and get your free 2 weeks. You either got to use it with TD Ameritrade if you're still on TD Ameritrade, or you have to use it with Tradier. Tradier. Many of us hadn't heard of Tradier. Me being one of those people, I had not heard of Tradier, but it is a broker that they utilize. All right, it's a way for you to start to do automated trading, and that's something you don't have to watch. All right, you don't have to watch it as much. So then. Let me say this to you, because some folks get a little nervous about, automated trading. But if you have a 401k or an IRA or something that you're not the person who controls what is bought and sold, then you're already automated trading. By the way, you just automated trading with a human. If you're not the one who's picking the entries and the exits, then you're already automated trading. Right? So some people are kind of shy of that. I don't want the broker to be controlling my mind. Well, they don't control it. Peakbot is just going to enter the one trade you pick. It's not going into all the different areas. This is not like the movies. It's not going into all the areas and finagling around with your stuff. No, you go to Peakbot and say, enter the trade for this particular wheel strategy. And that's all it's going to do. Right, I'm going to share one more time because I want to show you where this actually happens. I'm going to try to show you where it actually happens, I think, but maybe I'm not. Let me see if I can get to where I think I want to go and if it'll let me get in there, because you may have to. Are there questions? Preguntas? Any preguntas? What's the word for any in Spanish? Like, do you have any questions? What's the word for any? And we got any Spanish speakers online? Do you have any questions? You can say más preguntas. Let me see. Yeah, okay. Cancel. Here we go. Let me go find it again so we can share. Unas preguntas. Yeah, más is more. Do you have any more questions? But if I want to know, do you have any questions? Unas preguntas. Okay. Thank you. Okay. Are we sharing? Yes, it is trying to share the screen. That's not the screen I wanted to share, I don't think. Oh, yes, it is. Duh. Okay, so you're here. If you're in Peakbot and you're looking to do your wheel, you would go to, when you're in your account, it opens up like this. You would select here a plus because you're ready to do your thing. You're going to go here and select the bot, which is the wheel bot. We were talking about the wheel. So you're taking the wheel. Then you need to drop here. You can type in the stock you want. Let's see which one of those that I think was really a good one. Let's do TQQQ. TQQQ, and the stock will appear. You can type in the whole word or you can type in just the ticker. TQQQ, it asks you how many spreads do you want to do. I only want to do one contract, right? And then you basically activate it. Then you agree. It will then say here that it's the budget in the bot is $4,300 because of the strikes we were set to pick, but it's not using that much budget. The bot is only going to need the spread. So don't let this number up here make you nervous, because it's not going to need that much money. So let's say we did another one. I'm showing you one more example. I'm selecting the bot. We got the wheel here, and I'm saying, let's say I want Palantir, right? Palantir Technology, select it. I say, okay, I want one contract of that, and then activate it. I agree. And then basically what it will do is, then when tomorrow or Tuesday opens up, it's going to then, I'm not sure what happened. It didn't finalize. It's going to then go and get the trade up and running. I got you. One, activate. Activate. I don't know what happened. Oh, error. Okay, I already have Palantir in my box. That's why it's in. It's already. We're already here. What are you doing? We already got that one. Okay, I'm gonna do just one more. So, let's say we were picking X, United Steel. I have one contract, and I want to activate that, and then I agree. It's gonna say, "Yep, this is how much money." It's not taking that much money. So it's taking the spread, like I said, and then the wheel here shows you what's under the bot. So if I was to click down here with the bot, it tells you I got AMC, Mara, T Triple Q, and X. Some of them are paused, right? But it tells you what bots are there. If you don't want it, you can turn it off. You can pause it. You can just delete it all together. Again, you got total control over all this. All right. I didn't intend for this to be necessarily a Peakbot demonstration, but I think there's a lot of potential here with automated trading, especially for those people who don't have a whole lot of time to be watch trades during the week, but you want to be able to generate profits. You want to generate profits and premiums, then you can get a bot to help you with entries, and then you can manage it from there if you want. If you want to close it out early, you just do. You just do. Okay. Why is the call spread a different delta? Are you looking at the watch list, Ander? Is that what you were, Ander Cat? You looking at the watch list? If so, the call spread, this is what happens after you enter the put side. If you were to get assigned, the bot will also manage the covered call the subsequent week. So if you do a put credit spread or you do sell or put this week and you get assigned, the bot will manage the covered call next week. And the covered call delta for picking those strikes is a 25 delta, not a 30 delta. If that's what you're asking me, I think it's what you were asking me about. 50 delta, sorry, not 50, not 25, it's 50. They changed it. It was something else. On the covered call for the next week, they will pick the strike at the 50 delta to sell against. So if it goes past that, you will basically release your shares, collect your money, and go on about your way. Yep. So you got one set for the put side. If you're selling puts, the other ones is the delta for the for the call side. Tienes unas preguntas. I like that. Okay. Iron Condor, does it matter which side you start? And should the premiums be near each other? Not necessarily. Not necessarily. It does not matter which side you start. You should start as the price is kind of coming towards whichever side you're going, or it has bounced off of a resistance or a support and it's going in the other direction. That's when you should enter the sides of the Iron Condor. I'm not a fan of entering it as one Iron Condor because that doesn't help you maximize your premiums. So no, you do want to enter the call credit spread or the put credit spread. You want to enter them separately. All right. Fernando Felix is helping us. Alguna pregunta. Okay, that helps me with the Alguin tiene una pregunta. Do you have a question? Tell me what that is, or just say alguna pregunta. Oh, gotta run. See, you missed that, bro? Yes. Oh, wow. You're welcome. Cool. Good to know that you should enter separately. Yes, you should. All righty. So during this call, in our last hour and 8 minutes, we covered what's happened last week in the market. We covered what's going to happen this coming week, earnings, and meetings and such. And then we went into looking at some trades using Peakbot. You can go to usepeakbot.com if you'd like to do a free trial. Let them know I sent you, and let the bot, help you with that. If you're part of our challenge, we're glad to have you go into the chat. We're communicating and stuff in there. Any of the things we're talking about, credit spreads, selling puts, selling covered calls. I've got training on all things at my website, and you're very welcome, very, very welcome to go to Educator2Trader.com, to trader.mvsite.app, and go and check out what we got going there. All right. We have a membership where we meet together every morning and we trade together and we coach once a week. We do all of that inside of our membership. If you're one who's looking for a strategy that you can make money on every single day, we've got a, we can use SPX or XSP. I'm looking away because I'm trying, my brain has got me doing playbook.net, trying to do more than one thing at a time. But you can look at the SPX playbook, which is an ebook I wrote that has a strategy in it that walks you through how to utilize 0 DTE stocks to make money every single day. Around, if not more than 10% each day. The strategy, needs to be studied a bit and get yourself up and running. And we have a whole telegram of people who trade that strategy together and support one another. So you can check that out also for $27. SPXplaybook.net is the strategy for 10% profits each day using 0 DTE stocks. All right. If you haven't liked and subscribed to the channel, like this channel and subscribe, all that good stuff, please go ahead and do so. Hang out with us all the time. I go live on Sundays. I go live on Wednesdays, basically with the check-in for the trades we talked about on Sunday. We come back on Wednesday at 2:00 in the afternoon while the market is open to see what's going on with that. And then I upload videos at various other times. Find me on social, follow me in all the places. If you've got something you want specific, you need some direction or guidance, I do one-on-one sessions. Just go ahead and get registered with that. Send me a message, all those good things. All the things people always say, me too. I'm Educator2Trader in all the places. All right, you can find me and send me a message and we can talk about what you need to talk about. All right. I sure hope everybody had a really good time and got great value out of our time together. And I want you to do 2 things like we always do in our community. Boop, 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 boop. We need to stay green and we need to get this money. All right. I will see you all in the market. Bye-bye, everyone. Bye-bye.